So the model that I'm going to show you in today's video is literally the only model that you will need if you are wanting to be successful in trading and in the financial markets. And I'm also going to give you a full checklist that you can go through and check off once you are looking for trades within your sessions. So first of all, if I just show you the checklist and just give you an idea at what we are looking at. So as you can see, right, we've got this right here. So our checklist is to first of all determine market direction. So you can do this by 15 minute, 1 hour, 4 hour, whichever you prefer to use. And then once we have got our market direction and we know if we're trading bullish or bearish, we will then look for POIs to trade from. So POIs are coming in the forms of fair value gaps or order blocks. And then once we have those two things, we will need to look at liquidity sweeps into our POI mitigation. Again, if we get a liquidity sweep without a mitigation of our POI, we will not look to take that trade. Why? Because it doesn't fit our trade plan. So you will need those two things to happen in order to take a trade. And then the fourth and final thing will be a market structure shift and a confirmation entry. I will show you a lower time frame entry and also an higher time frame entry. So if you want to trade on lower time frame, you've got an idea of what this looks like. And if you also want to trade on a little bit of an higher time frame, you've got an idea also of what this looks like. So first of all, if I just bring this down and we can kind of look at the model that we're going to be looking at. As you can see, right, this is kind of the model that we are looking at, and the direction first of all is bearish. So we will be looking for shorts only. And then once we've got our market direction, you want to mark out our POIs. So what we've got right here is we've got an order block or a fair value gap, whichever you prefer to use. Or you can also use a combination of both, that's absolutely fine. Once we've got this, we need our liquidity sweep. So as you can see, we've got this old eye right here, which is also the Asia high. That gets swept into a mitigation of our POI. We then get our market structure shift, and this is where we can then look for our entry. We've got all of our checklists ticked off, and then you can then look to take the trade. So this is overall the model that we're looking to trade, and this is the only model that you will need. This is very, very high probability. Once you see all of these checklist points ticked off, this is very high probability that this trade will play out. And then you can go ahead and go onto the charts, take a look at this, go ahead and do some markups, do some backtesting, whatever you want to do, gather some case studies, and then you can look at this in a live situation once you have backtested all of these rules put together. So as you can see, right, I am on the 15-minute chart to begin with, and this is kind of the time frame that I will stick on when I'm looking at my market direction. You can do this on a 1 hour, you can do this on a 4 hour, whichever you prefer to use and whichever is more, clear to yourself. So if I zoom out first of all and see kind of where the market is trading, as you will notice, we've been trading downwards and in a bearish manner for quite some time now. And if you want to, you can go ahead and mark out the most recent breakout structure, which for me would be around here. You can add things in like, premium and discount if you want to do that. This is just added confluence. You don't need it, but you can add it if you want to and if you know how to use it. Then obviously, as you can see, we've got this little range here during Asia, and then we're now looking for shorts because we've got our market direction. The next thing for us to do would be mark out our POIs. So what you could do then is zoom in. Can you see any, significant POI that we could trade from on the 15-minute chart? For me, not really. We've got this little order block right here. We've got a fair value gap sort of up here, but this is not something that I would be looking to trade from. And also, it's quite a distance away from, the Asia range and the liquidity that we're looking to be swept. So again, what we could do is we can jump up now onto a higher time frame. So we will start now on the 1 hour and look if there's any POIs on the 1 hour that we can trade from. And then if we jump up to the 1 hour, as you will notice, we've got a nice little, fair value gap in and around here. It's quite close to Asia range, so it would be, sufficient to then look to take a trade from this area. We've got these order blocks a little bit further up. But the fair value gap is first and foremost, and if we get an entry from here, you can look to take that. If it trades through the fair value gap, you could then also look to take a trade from the order blocks if you wanted to. But for me personally, the most high probability will be this fair value gap. And with that being said, what we can do now is drop down on to our 15-minute time frame and look for a mitigation and a sweep of liquidity into our POI. So we start coming up, and then we now tap into our POI. So we've got our liquidation, we've got our POI mitigation. What's left now? Our market structure shift and confirmation entry. So we drop down now onto lower time frame. In this case, I will drop down onto the 5 minute. So dropping onto the 5 minute, right, what we're looking for is a market structure shift. So for me at the moment in time, the market structure shift low would be this one right here. So until this low gets taken out, we're not looking to trade. Let me just delete this and clean up the charts a little bit. So we're now looking for this low to be taken. So this low has now been taken, and what we're asking ourselves now, is there any fair value gaps that we can look to trade from? There is a fair value gap right here, but what you will notice if we put our premium and discount tool on, this fair value gap is in discount, so for me personally, I would not be interested in that. There is, however, one in premium, which is situated right here, so you could take a trade from this. Set our order on this one right here, and then you could literally put your stop above this high if you wanted to, but for me personally, I would be happy just leaving it above this candle right here, because this right here is the third candle in the fair value gap formation, and you know, price should not trade higher than this fair value gap if we are going to continue in a bearish direction. So for me personally, I would be happy to leave my stops there. You know, there's no harm in putting your stops up here if you want to do that and you feel a little bit more safe doing that. That's absolutely fine. So you can target pretty much wherever you like. The most high probability will be the Asia lows right here, but you can target further if you want to. In this case, we will target a nice 1 to 3. So let's see how this trade does play out once we start playing price forward. As you can see, we trade down a little bit further, so we could bring our premium and discount. And then what this does signify is that this fair value gap is even further into premium, which makes this trade a little bit more high probability when we're looking at it. So let's play price forward now. As you can see, price does trade up towards our order. We then get tagged in, and then we trade all the way down, and then eventually what happens is we do hit take profit. And then what you could do is you could also couple this with an OTE, and if you look at this, as you can see, it taps in perfectly to our OTE range, trades down, and it's our take profit perfectly. So that right there is example number 1. Let's jump on to example number 2 on AUD USD. So we're now on AUD USD, and what we can do first of all is zoom out and just see which direction that our price action is trading in. The most recent breakout structure for me personally is this most significant one right here, and as you can notice, we are trading up to the upside and we are clearly bullish. So in this example right here, we will be looking for longs. So as you can see, is there any significant, areas that we could look to take a trade from? We've got this right here, which has been mitigated by this candle. We've got this little candle right here, which has got a little bit of inducement, but for me personally, there's nothing too clear on this time frame right here. So I will jump up to the 1 hour chart, and then what we will notice is we've got this, but below this, what we've got is we've got a fair value gap. So we've got a fair value gap right here. There is still some left to be filled. And then we've also got this order block right here. So for me personally, if price comes down and comes into this fair value gap or this order block, I would then be looking to take a trade to the upside. And like I said before, you can use stuff like premium and discount and things like this. So what we can do is we can take our premium and discount tool from the bottom to the top. And then as you'll notice, this right here is in discount of the range, so it makes this a little bit more high probability. Again, playing price forward, let's see what happens. So we are now tagging in to our fair value gap and order block, and in this example what we're going to do is we're going to drop down onto the 15-minute chart. We're going to wait for our market structure shift. We've swept liquidity below the Asia lows, so let's see what happens once we start trading towards the upside. As you can see now, we've got a breakout structure right here, so we've broken up this high, we've got our market structure shift, we've got fair value gaps down here that we can look to trade from. So for me personally, I would be happy to set an order around this area right here. So we'll put a trade on, stop below the lows, and then what we can do then is trade towards Asia highs. As you can see, a nice 1 to 2 would be, it way before Asia high, so that would be the most high probability area that I would look to take profit. So let's see what happens once we start trading back down. So we trade a little bit further up, and again what you can do is you can couple this with OTE. So let's see what happens now. So we come down now, we are tapped into this order. It's come straight back in towards our OTE of the range, just a little bit higher. So this is why you would probably take this fair value gap right here. And then what you'll see happens is we trade up, we hit our 1 to 2, and eventually we do take out Asia range high. So this is the overall model that we're looking at, guys. It's super simple, super easy, and if you want to keep your liquidity very, very mechanical, you can just wait for Asia to be taken, or you can also look at all lows or equal lows and equal highs. Trendline liquidity, whichever you prefer to use and whichever you see more clearly. Everyone's different and everyone sees the market a little bit, different to each other. There's no right or wrong. But this overall model, if we just go back over to GBP USD and we drop out on to the higher time frame, what you could do is sort of take a little screenshot of this or draw this out yourself, keep this in your journal, keep this on your desktop, laptop, whatever you use. And this is the overall model that we're looking to trade from. So every time you take a trade, it should sort of look like this, and it's not something different every time, it's exactly the same every single time you take a trade. And this is how you do breed consistency within trading, hitting the same setups every single time. And for me personally, this right here is an A+ setup. So that's pretty much it for today's video, guys. If this video did help you out, please leave a like on today's video. If you have any questions, as always, feel free to drop them in the comments. You can also contact me on Instagram if you want to do that. And without further ado, guys, thank you very much for watching, and I will see you in the next one.